Closing bell with me, Lovisha, Darad, and joining me, my colleague Yatin, Mota. Well, a smart recovery today. Bulls have fought well, and we saw some respite finally after compared to what mayhem we saw last week. 8 days of losses that the Bulls have, taken a fight back today. But we saw that the Sensex and Nifty, both of them were off its 1% from its intraday lows. Sensex is above that 75,996, and Nifty is also back above your 22,950 levels. We did breach below 22,800 today, but a good fight put it back to 22,950. Pharma stocks that have acted as a good pillar for the markets, up about 1%. However, if we see IT and auto stocks that continue to feel the heat, even in the broader indices, they fared comparatively well despite the opening cuts. Midcap up about 0.5% gains, and even the small caps were equally down, seeing a bit of a 0.5% cut. Definitely, the US markets are closed today, so there could be less FII participation, which could be playing out well for the markets. Yatin, a good day for the markets. Analysts have also pointed out that after 9 days of straight losses for the markets, the following week could see some good comeback. Do you expect some good building up of gains going ahead?
So, there is a good possibility, Lovisha, given the fact that we are right now on the oversold zone, especially on the benchmark indices, Nifty and Sensex. So, at least you can expect a rally on the large cap stocks. And, for the past few trading sessions, we are looking at a support which is getting built near that 22,800, 23,000 level. So, probably on technical basis, we are probably trying to build a base. Obviously, today again the midcap index opened with a big gap down. Intraday there was a smart recovery in midcaps as well. But if you talk about the overall nervousness in the markets, that is not getting a respite. Still there are a lot of stocks which are witnessing profit taking. But clearly today's trading session is showing that at least for the shorter term there could be a bounce back or a relief rally which is on site.
That's right. Let's take a look at some of the top Nifty gainers and losers at this point. Well, the top gainers include the likes of Adani Enterprise up about 3.3%, Bajaj Finserv again seeing a gain of about 3%, IndusInd Bank 2% uptick, Power Grid, Shriram Finance also featuring in the top Nifty 50 gainers list. If you look at on the contrary side, on the top losers on the Nifty 50, that comprise your M&M, which is seeing a cut of about 3.5%, more than 3.5% cut coming in for M&M. We will be discussing the stock more in detail later in the segment. Bharti Airtel seeing a cut of about 2.4%. Some of the IT pack names and IT counters are not doing well in the today's trading session, and that includes the like of Wipro, TCS, Infosys, all of them seeing a cut of more than 0.5%. But a defiant show by the broader markets. Yatin, why don't you take us through some of the strong names that you saw from the broader end of the markets?
So, if you talk about the broader end of the markets, clearly some relief rally seen there. Godfrey Phillips, that stock gained 17%. Glaxo after strong set of numbers and a broad 5% kind of a margin expansion year on year saw some gains, almost 16% higher for that pharma stock after the quarterly numbers. Another pharma stock, PPL Pharma, which is Piramal Pharma, that saw 8% gain coming in. Stocks like Manappuram Finance and NLC India after a sharp correction last week are witnessing some bit of profit, building up overall. So, good moves coming in there. What was not doing well is the likes of Tanla Solutions, stock was down 6%, Anandraj down 7%, K Fintech down 10%. So, few of these stocks continue to, reel under pressure. Stocks like, TTML, Jyoti Laboratories, Manyavar, Thermax, VIP Industries, GMDC still continue to reel under pressure and are at 52-week lows.
All right. Let's break down some of the stocks that did come in the limelight. Like I was talking about M&M, one of the top Nifty 50 losers. We saw that the shares have did tank as much as 5% in today's trade. However, it did come off its day's low and has settled about, with about 3.5% cut. Basically, the street was not impressed by the bookings which was received for its two new electric SUVs, which is your XEV 9e and BE6. Now, they recorded about 30,000 bookings on the first day itself, which has taken the book value to about 8472 crore rupees. However, brokerages pointed out that it still remains lower relative to other recent launches from its ICE portfolio. For instance, Citi said that the absolute volumes of BEVs have been much lower than the recent launches, and they will be watching out on how the EV facility ramps up in the coming days. Nomura, on the other hand, that had a differing view. They believe that since the EV market is still in the nascent stage, the 30K order book that M&M has clocked is quite promising, and they believe that the volumes can increase further as customers get more confident with the EVs. Right now, they're a bit hesitant, but they believe that the numbers could ramp up as in more they get more confident with the EV models. Yatin, a good step for M&M in the EV market, but we will watch out how the other players are also doing, like Maruti, Hyundai and Tata Motors, as they step in and take this battle forward too.
Yes, right now if you look at the reason why stock fell, particularly after the booking announcement, was that if you look at the current capacity of Mahindra & Mahindra to produce these new electric vehicles is almost 5,000 per month. And assuming a 30,000 order book which remains intact, the order book is only for next 6 months or 2 quarters. Given the fact that new launches for XUV 700, the new Scorpio N took order books beyond 12 months of visibility, clearly the electric vehicle still is at a nascent stage, or probably the kind of lag which we are looking at was much smaller. The markets probably expected a higher booking number, and probably the profit taking took the stock lower, almost ended at the day's low, 4% down for Mahindra & Mahindra after that electric vehicle booking launch has been successful per se, but probably the market was working with a higher number.
That's right. But let's take another stock in focus, which also cracked today. That is your shares of Senco Gold. The stock did plunge for the second straight day in a row, and it is down about 15% in 2 days due to its disappointing third quarter results. Now, we saw that the company's EBITDA margin took a hit in Q3. It dropped to 3.8%, which was a sharp decline from the 11% which it posted a year ago quarter. The weak operational performance also affected its bottom line. We saw that the net profit has declined about 33.5% year on year, while revenue stood strong and it rose about 27% year on year. Several brokerages have downgraded Senco Gold. They believe that the company's stock after the poor Q3 results. For instance, like Motilal Oswal has downgraded the stock to neutral from buy. The brokerage has also slashed the earnings estimates by 25 to 30% for FY 25 to 27. Another brokerage firm, which is your MK Global, that has also cut Senco Gold's target price by about 23% to 600 rupees. Yatin, the stock has taken a hit and it did record a 16-month low today. And even the Q3 results don't speak well for the stock. What do you gather for Senco Gold?
So I think the 70 crore hedging loss as well as the kind of provisioning that they have done for the custom duty comes as a surprise. In fact, a lot of brokerages have cut the target price and EPS estimates given the fact that the margins were adversely affected for the quarter. So clearly, on the back of weak numbers, stock saw a big sell-off. In fact, for the last 2 trading sessions, the stock has fallen more than 30%, and most importantly, now very close to the IPO price. In fact, below that. So yes, the pressure clearly continues on jewelry stocks. Earlier, we saw Kalyan Jewellers correct in trade in the mid-cap end of the market, and now certainly we have seen some bit of sell-off which has come in for the stock of Senco Gold. But from Senco Gold, talking about another stock which has seen a big sell-off in trade today, logged in lower circuit, was AGS Transact. Now the company reported a loss of nearly 194 crores for the third quarter. Also, we had a big surprise on the recent management changes. Nearly 4 directors have resigned from their positions, including 2 independent directors. And due to non-payments of salaries, a lot of their employees have stopped refilling the ATMs, which is the primary job of the company, which has led to a lot of ATMs, including the ICICI Bank's ATM network, running dry. Now, sources tell Money Control that the lenders are expected to classify the company as NPA, given the fact that the financial position has significantly deteriorated quarter over quarter. Also, 1,000 to 1,500 crores of cash inventory may be at risk once the company is classified NPA. Banks are clearly monitoring the situation, and if the situation escalates, RBI also would be taken into loop according to this news report. So, AGS Transact not only a P&L problem wherein they've started reporting losses, but also the balance sheet has seen strain with probably NPA classification on the cards. along with the customers also unhappy given the fact that their operations are getting hit because they are not able to service the bank's ATM network.
Okay. Since we've been talking about some of the stocks that did see the decline, we have another stock in focus, that is your Utkarsh Small Finance Bank. The stock did plunge about 14% and has hit an all-time low after its disappointing Q3 performance. Well, the bank did report a net loss of 168 crore rupees for the third quarter, which is marking a significant decline from the profit that it had posted in the year-ago period. The bank's asset quality also saw a sharp deterioration. We saw that the net NPA levels jumped multifold during the quarter, while the net interest income has marginally declined to 480 crore rupees. The management also stated that the operating environment remained difficult for the micro banking lending due to tight credit and of course the higher provisioning that it had to make due to stricter guardrails. They said that though the guardrail advisories impacted the disbursements, but it is structurally positive for the sector benefit, which will be seen soon. Yet in disappointing Q3, and even the technical analysts that I was talking to this morning, they also pointed out that there is no near-term positivity for the stock on the horizon. Do you concur with the same?
Lovisha, like most of the small finance bank and most of the microfinance lenders, the past 1 or 2 quarters have been very impactful, because the bad loans have been clearly increasing for smaller ticket loans. The kind of results that most of these companies have shown indicates that the future quarters also could be painful in terms of asset quality and build-up of bad loans. And probably, if you talk about most of the sector peers for Utkarsh Finance Bank, they have seen a similar kind of a correction which has come in. Today also the stock saw a 15% intraday decline. In the last 30 minutes of trade, there was some buying because there was recovery in the markets, but clearly the stock at new lows, probably below that 25 mark intraday today. Some respite in the last half an hour of trade, but clearly asset quality concerns still loom large on the entire sector, including smaller finance banks and MFI businesses.
That's right. Well, certainly the markets are volatile, and to navigate this volatility, MC Pro research team has created and is set to unveil its Budget 2025 portfolio. Well, the team has carefully curated a portfolio of 18 stocks to ride this uncertain market environment, and it does include analysis of opportunities which is presented by the wild gyrations of the market, and of course for the opportunity the budget has presented us. So do get an access to our MC Pro feature just on Money Control to find out how to get ahead of this volatility. But with that, we have come to an end of this edition of The Closing Bell. It is a wrap from Yatin and me. Thank you for watching.